want a sense in terms of pricing first. How is the ACS, price movement as of now? If you could compare it, as of now, what is it? Maybe a couple of months back, what is it? And what's the trajectory going ahead?
Hi, Nigel. Thank you for having me today. So coming to the asbestos business, we have had a good pricing because of the shortage of material supply in the beginning of this year. And as the industry is a very seasonal one, there has been a dip in the Q2 going on to Q3 by about a 5 to 10 rupees margin in terms of the overall. But I think the margins will be good going forward because we are seeing a good agricultural output this year. The rains have been good. The rural trend has been very positive for us. And we see that the trend should be positive going forward for the next half year.
What is that price? I mean, can you give us a range of how they have been trending and what is the outlook?
So because of the pent-up demand, because of the material shortage and because of the whole lockdown, we got a good good demand from the rural side as we've seen over the last couple of months. So the pricing around, I mean, it's hard to give numbers out in terms of where we exactly stand because each market is different. But the range has been about 5 to 10% higher compared to the traditional, pricing over the years. And that we are seeing it slightly fall because of the unseason, because of the rainy monsoon seasons heading in. But we are very confident and the trend is looking positive that the margin should go back up as the Q3 Q4.
Okay, all right. Let's talk about your building products business. You said the prices are 5 to 10% higher than what they normally were. Now, in the second quarter, the building products division did a margin of around 19%. And in the quarter one, which is one of your strongest quarters out there, in fact, you did 22%. What's the sustainable margin out there? I ask you this because cement prices have gone through the roof. So is that going to hurt your margins?
So actually, cement prices have gone up and so have the steel prices on the other end. So we are trying to, make the best out of the situation. I think we should be able to see around a 19 to 20% steady margin rate for this year.
Okay, that's for the building products business, 19 to 20%.
I think I have to mention here that the VNext business has supported the overall margins as well. What we've been talking over the years, I think it's finally here this year that we'll be seeing a positive trend where the VNext business also contributes in a good way. So that definitely is helping us.
Okay, all right. You briefly mentioned that steel prices are moving up. Now, the asbestos sheets will be competing with the colored coated steel sheets as well. So if you could give us a price difference, what is the current price difference between the two? And are you seeing a shift from the coated steel sheets to the asbestos sheets?
Sure. The rural demand is actually what is supporting us, and that's where the core shift of metal sheets back to the AC sheets is happening because people are realizing the utility point of view. So the price difference between us has always been around 10%. And any time the steel prices go up, we definitely benefit with that because people tend to shift to us. So that's the trend that we are seeing now.
Okay, all right. What about earlier when you joined us, you told us that in fact the guidance for the year would be that revenue should be more or less flattish. Do you stick to that? And also, could you tell us about the textile business at the half-year mark? It's been a washout. You said that you'll do 60 to 70% of last year. That would mean around 120 to 130 crores for the year. Is that on the cards? Because at the half-year mark, you've done less than 40 crores.
So first off, about the building products business, I think the AC have covered. I think VNext has done almost about. We'll be seeing another 8 to 10% growth in the next half year, even though we lost out completely on Q1 because of the whole lockdown. I think the numbers should be the same in spite of what we've lost in Q1 in terms of revenue.
Okay.
Coming to the entire capacity utilization, all our VNext plants are now up to 100% capacity utilization, and that's the reason we actually just inaugurated our fourth plant. We did our puja yesterday, so very happy to share that with you. And coming to textiles, yes, I think the trend has been pretty much on the same track. We just kicked in the Bombay markets, just opened up. wherein we touched about 70 to 80% of our sales that we normally do in the last month or so. And going forward, I think H2 part of view, I think we'll be sticking to 70% of what we did last year for textiles, unfortunately. Yeah.
That'll be a tall ask then, yeah, because from around 40 crores, you're expecting to do nearly around 140, 150 crores for the year. So we'll hold you to that number. Final question, HIL as well has been doing well. If you could tell us, what is the market share now between HIL and Visakha?
So right now we'll be around 90 to 20% in terms of market share. Like I shared last time, I think the focus of every company is different year on year based on the situations we face. Last year, we managed to get the maximum in terms of market share. This year, we are concentrating more on our margins. We are not necessarily going behind volumes in terms of comparing with HIL, but we are concentrating more on margins where we are getting a premium in almost every market today compared with our competitors.
Oh, you're getting a premium is what you're saying?
Yeah.
All right. So in terms of market share, are you all neck to neck or are you a little bit lower?
Yeah, we'll be around the same now, but maybe HIL will go ahead because we are concentrating more on the margins.